Meet Munehisa Homma, the 18th century trader who revolutionized markets forever. His trading secrets have dominated markets for over 300 plus years. Born in 1724 in Sakata, Japan, Homma inherited his family's rice trading business. But he didn't just continue the family legacy. He transformed from merchant to an expert in market psychology. In an era without electricity or computers, he created a system so powerful it changed history. Homma traded on the Dojima rice exchange, the world's first futures market. Rice was literally currency in feudal Japan. The market was brutal, volatile, and dominated by insider information. Most traders lost everything. Homma did the opposite. His success was staggering. Legend says he made 100 consecutive profitable trades. The Japanese government, breaking tradition, elevated this merchant to samurai status, a rare honor. But Homma's genius went far beyond just winning trades. He realized something that would transform markets forever. Markets are made of people, and people are driven by emotions. So he began recording the emotional feel of the market each day. To visualize that psychology, he created what we now know as the candlestick chart: open, high, low, close. But unlike bars or lines, these shapes told stories. White bodies mean the bulls are in control. Black bodies mean the bears are dominating. Long wicks means rejections and reversals. In 1755, he wrote one of the earliest books on market psychology, The Fountain of Gold, the three-monkey record of money. His core belief: when all are bearish, there is cause for prices to rise. Homma understood something most traders today still don't. Markets move in emotional cycles, and sentiment always lags reality. He called them yang, which is the bullish phase, yin, which is the bearish phase, and transition, the crucial shift between phases where fortunes are made. Eventually, Homma's methods were systematized into 5 patterns. Known as the 5 Sakata patterns, these are timeless and the modern equivalents are still used today. Let's dive in. First up, we've got 3 mountains or Shenzhen. Picture 3 peaks or valleys forming on your chart, with the middle one usually standing tallest. This is the market screaming exhaustion. Think of it as a final gasp before a reversal. Sound familiar? You've probably seen its modern cousin, the head and shoulders pattern. It's a classic, and for good reason. When you spot those shoulders flanking a higher head, you know a shift is coming. Next, we've got 3 rivers, or Sansen. This one's all about a trio of candles clustering at the top or bottom of a trend. It's like the market's hitting the brakes, momentum's stalling, and sentiments starting to flip. In today's world, this is your morning star or shooting star. Personally, these are some of my favorite setups. Catch a morning star at the bottom of a downtrend, and you're often looking at a gorgeous reversal. Pattern number 3, 3 gaps, or Sanku. Imagine 3 price gaps, all charging in the same direction. This is the market running on fumes, pure overextension. It's that FOMO-driven panic or euphoric climax before things flip. Today, we call these exhaustion gaps. Spot them, and you know the trend's about to hit a wall. Moving on to 3 parallel lines, or Sanpei. This is a beautiful one. 3 strong candles all marching in the same direction. It's the market saying, this trend is clean and it's got legs. In modern terms, this is your 3 soldiers or 3 crows. When you see this pattern, respect it. The trend is alive and kicking. Finally, we've got 3 methods, or Sankyo. This is when a trend pauses, consolidates, and then powers on. It might look like a pullback, but don't be fooled. The dominant force is still in charge. Today, we know this as the rising or falling 3 methods. It's like the market's catching its breath before its next big sprint. And there you have it, the 5 Sakata patterns, bridging centuries of trading wisdom to your charts today. Homma's genius was this: he turned emotion into patterns, patterns into strategy, and strategy into generational wealth. These 5 patterns weren't arbitrary or handed to him. They were born from real trading behavior in the world's first futures market, paving the way for modern trading methodology. Most traders today still chase indicators, strategies, and any shortcuts they can find. But Homma is proof that the real shortcut is in learning the fundamentals. Homma's patterns aren't relics. They're timeless. From crypto to stocks, traders still use these to turn emotions into strategy and strategy into wealth. And if you want to build true financial freedom, then this is your edge.